We are live, 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 we are live. Share to your friends, to anyone you think that needs to be here. Right. Okay. We're live, we're live, we're live. Okay. So this is a special class. Like call it class, right? Or I want to just share this from my heart. This is a free training, a free class. Okay. So it's a free class. Right. To help us understand how to implement one of the important determinants of the market. Okay, this training will help you to be able to speculate daily buyers properly, weekly buyers properly, even monthly buyers. Right, so we have them in stages. This is going to help you to increase your profitability, right, and your win rates. I can guarantee you that. Okay, right. So let me share my screen very quickly. Let me share my screen very quickly. Share my screen already. Right. So this is just going to be an introduction to what we are going to. It's going to be a series. It's going to be in parts. Right. I can't exhaust all I have to say today. So this is going to be an introduction of what I have to share with you. Right. Okay. So very simply, why are we here? What is this training all about? Okay. So in the description of this, it's simply how to implement what I call the previous day high close and previous day low close for increased win rate and profitability. Now, if you look at the financial market, any financial market, right, we have the factor of price, right, and time. Okay, the market, we have the factor of price and time. And in every market, we have what is called the open price, the high, the low, and the close. Okay, every market has these four characteristics. So your candlestick, when your candlestick prints out, the components or what we call the properties of a candlestick, it is comprised of open price, okay, high price, low price, and close price. So having this understanding, every single day we'll have open price. Every single day we'll have the highest point price got to. Every single day we have lowest point price got to and a close. Sometimes you might not have a high price or a low price. You might have just open, okay, open, yeah, just a little bit of high. So when you see a candlestick that has small wick, it means that there was small high or small low. When you see a candlestick that have a long wick, it means we have a long high or a long low. So whatever the case may be, this concept of previous days close will help you to increase your profitability. Now, how did I get about this edge or this concept? I was reading a book by Mark Douglas, right? And he said something profound in the book. He said when price closes, for example, price closes bullish. Let's take bullish for example. Mind you, we can only close either bullish or bearish. You agree, right? Price can either close bullish or close bearish. Okay. Now, so let's take for instance, price closed bullish. That means you close up, right? Now, the next question is for the next day, will the price want to close higher than the previous day's price or lower? That means buyers might want to bid price higher than previous this price, or sellers might want to bid price lower than previous this price. So this is the ideology of this concept. You can see it's not a strategy. It's simply how the market move every single day. It's a daily bias. It's a daily bias that when price closes, buyers will either bid price higher or sellers will take price lower. Okay, that's the first ideology you need to understand. So I'll be discussing one, how to identify previous day close, high and close, and previous days low and close correctly. So mind you, if the candlestick closes bullish, we are going to be marking the previous day high and close. Okay? If the candlestick closes bearish, we are going to see how to mark the previous day's low and close. That's one. Then secondly, I will show you how to use this high and close, okay, for your bias confirmation. For your bias confirmation. So after knowing what the previous day has done, how do you confirm the bias for the current day? Number three, I'm going to show you how to combine this edge with smart money concepts for your liquidity grabs, for your point of interest of demand, supply, order block. We're going to see how to combine this edge with smart money concepts, price action, and levels for the institutions. And finally, number four, we're going to have real chart examples to show the power of this edge. We're going to have real chart examples to show the power of this edge. If you're together, let me see. Type in together. Let me know if you're following. Right, let me know if you're following. I need engagement, right? Okay, I need engagement to see that you're following. Okay. So if you're gonna watch this after now, yeah, together. So I hope we got the introduction parts, the ideology behind our previous days prices. Is that's the market. The market will always give us open price or close price, highest price and lowest price, right? So when the market closes, the next question is, will the next day be bullish or bearish? That's the ideology. That means we buyers want to bid price higher or lower. Okay, that's the ideology. So join with me as we go in the series of implementing previous days high and close. Okay, let's move. So I come to my chart. So let me write out some things for us here as a note. Okay, so what we are dealing with, like I said, we are dealing with um previous day high close underscore previous day low close. And we have four variants for this hedge. We have the case whereby what I call the bearish towards bullish. What this means is that the previous day closed bearish. That means we open up and we close down. So that means we had a bearish day. Okay. Then to bullish mean that we are expecting the next day to be what? Bullish. So we call this bearish to bullish. That means previous day was bearish. We are expecting the next day to be bullish. All right. Second variant, we have it as the bullish to bearish. What this means is that previous day was bullish, meaning we open below and close above. That's bullish candle. Open below and closed above. Bullish. Now, to bearish now mean that we are expecting price to be bearish for the next day. The next variant is our bearish to bearish to what? Bearish. So similarly, what this means is that the previous day closed bearish, meaning that we opened up and we closed down. That's the bearish close. So we are expecting the next day to also what, be bearish. Then finally, we have bullish to bullish, bullish to bullish. What this means again is that previous day closed bullish, meaning we opened down and closed up. We are expecting the next day to what, to continue being bullish. So these are the variants, the four variants that we can only have. The market can only print out either bearish to bullish, bullish to bearish to bearish, or bullish to bullish. Say I hear. If you are with me up to this point, say I hear. If you are with me, I hear. The market can only give us these four variants. Only these four. Nothing else. Nothing else. Only these four. So my goal and my job is to simplify these concepts to you. No concept will be difficult or hard again. It's only the discipline that will be hard. The strategy will be simple. It now depends on you to now make it either hard by this, by sticking to the plan, or by throwing away the plan to the trash. But see, that technicals is going to be very simple to understand. Let's go. Now this is step one, right? Now step two, our buyer's confirmation. Okay, the next thing is for what? Buyer's confirmation. We now want to know, okay, so how do we now go into the day for buyer's confirmation? All right, now let's take it one by one. For my bearish to what, bullish. Okay, now there are two things that will happen. Is either as price is entering the new day, there will first be manipulation before a distribution. As price is opening into the new day, two things can happen. There will be manipulation before distribution. That's one scenario. Or two, there won't be manipulation. There will just be what? Distribution. So the case where you have a manipulation is where you will see that there's going to be a wick on the daily candlestick before it starts selling or buying. Okay, but the case where there won't be manipulation is where you will not see any wick on daily time frame. So I'll give us the scenario for where there is manipulation and where there is no manipulation. Are we together? Now, for a bearish to bullish, let me start with what? Manipulation. Let's start with where there is manipulation. Where there is what? Manipulation. Now pay attention carefully. For a bearish to a bullish variance where there is manipulation, what do we expect to see? Because we know that when we have bearish, it means that price closed bearish for the previous day, right? So we are in the close. We open up, we close down. Now for there to be a manipulation, it means price will first trade below the close. Okay, price will first trade below the close, then we now distribute. Because normally, if price is trading below the close, we should be bearish, right? If the price has closed right at 2 naira, for example, right, and the next day is opening at 1 naira, we're already bearish in sentiment. But we want to have a bullish scenario. That's our variance. We are doing bearish to bullish for the day. So when there's manipulation, it means price will first manipulate and trade below the low, below the close price. Then price will now what? Distribute. So I'm going to write here, for manipulation, I would say that price will trade below the previous day close. Okay, previous day low and close. Then distribute. So that's below previous day low and close will be the manipulation. Okay, manipulation. It's very simple. Just follow me carefully. When there is manipulation, price will first trade below the previous day's low and close, right? And with my observation, that usually happened during the Asian section. So let me just put it Asian. But sometimes price even does that in London. Okay, so let me say mostly Asian section, mostly Asian. Okay, so we'll not be absolute on that. Then distribute above what previous day low and close. This is a perfect example. I will show us chart example, no doubt. Okay, now where there is manipulation, price will trade below the previous day low and close, mostly Asian manipulation, then distribute above previous day low and close. Okay, is this clear? Bearish to bullish where there is manipulation. Is that clear? Then the next one is where there is no manipulation. I'm taking my time to explain this carefully. This is what I should have done in my class for mentorship, but I want to just give it out. Right? I want to give it out. I want to give it out. So you need to appreciate. You need to appreciate. I want to see clear. If it's clear, I should have chat for this, but I have Jesus mind. I want to see a clear. If it's clear, if it's not clear, I'll go. I'll come again. Okay, clear. I love that. Clear with an emoji. All right. So this is what we are expecting, right? Now, where there is no manipulation, what will price deliver? Like I said, this is not a strategy. This is just simply how price delivers its action, right? So we are not. This is not a strategy, right? It's a concept. So where there is no manipulation, price will trade above straight. There is no need for price trading below. Price will just start trading above. Price will start trading above. There won't be any manipulation. Okay, price will trade above the what previous day low and close. Simple. Then continue distributing. There is no. Then continue what distributing distribution above PDLC. These are the only two things that can happen. I let's tell my OGs that if you find a concept, ask yourself what are the only two or three things that can happen. If you want to simplify a concept, you can apply it to any life scenarios too. If you want to solve a problem, ask yourself, okay, what are the only two things or three things that can happen? So in our case now, these are the only two things that can happen: manipulation or no manipulation. Good. Let me screenshot this and send to to my group, to my guys. Okay, we're just laying the foundation today. Today is just introduction, right? We won't do much. We continue again. Tomorrow is Saturday. Yeah, I will give us. I will give. I'll do a plan. I'll get to us about that. I want to do it. Good. Let's go to the next scenario. So let's go to what? Can I move ahead? Can I move to bullish to bearish? Can I move ahead from bullish to bearish? Bullish to bearish. Bullish to bearish. Bullish to bearish. Bullish to bearish. Where there is manipulation and where there is no manipulation. Where there is manipulation and where there is no manipulation. Where there is manipulation and where there is no manipulation. Where there is manipulation and where there is no manipulation. Last time, where there is manipulation and where there is no manipulation. Okay? All right. Now, where there is manipulation, what does bullish mean? Bullish means that price opened and closed above our closing. That means we have price starting from 1 naira and price closed at maybe 5 naira. That means we are bullish. Now, for the market to be bearish for the next day, that's where we are on now. For there to be a bearish day and where there is manipulation, what would that mean? Price will first manipulate and trade above to induce buyers that we want to start buying for the next day. That means price will trade above previous day's close. Are we getting the picture now? For where there's manipulation, price will first start trading above the previous day's close, mostly Asian. Then there will now be a distribution below previous day's high and close. Is that clear? Let's go. Price will what? Price will trade. Price will trade above. That's the difference. For this other one, price will trade below. Oh, sorry. For this one, price will first trade what? Below. Capital letter below. Right? Then price will now distribute above. Okay? For this case, price trades above. Then, yeah, good, very important. So now, price will trade above what? Above the previous day high and what? Close. Mostly where? Mostly what? Asian. And that is what? Manipulation. Manipulation. Then what will happen? Then distribute below below what? Below previous day high and close, because we want to sell for the day. Come on, I told you, my guys, this will increase your win rate and profitability. You can take this to the bank. I'm telling you with every tell in me that you can take this edge to the bank. Just go and back test. That's what I'll just tell you. After this series, go and back test. if you not pay tight to me, na wetin cause am. After this series, go and back test like mad, at least 100 days. In your first 10 days, you will be blown away. And let me put this disclaimer. Number one, this is not 100% because of course there are some days that will be slow. There are some days that you have some weeks, some funny candlesticks. So this is not a 100% holy grail, right? So don't be loose guarded. You risk management is still very important. Okay, risk management is still very important. Discipline risk management is still very important. But I can beat my chest that this will increase your win rate 100%. Yes, that I can assure you. Now let's move ahead. So now, when there is no manipulation, that means price has closed bullish for the previous day, and price is not going to manipulate the low and close. What will price do? Everybody, price will what? Price will trade. Price will trade how? We trade below, straight below the what? Previous day high and close. Then do wetin? Continue to distribute below the below. Continue to what? Distribute below PDHC. Now let me say something to just let me hype myself, because like one my guy said, if you no hype yourself, who go hype you? You won't find this thing I'm teaching anywhere in the internet. You won't find this anywhere. Nobody in this world has this, because this was what the market taught me. Now I'll be very, very maybe surprised if I see a trader using this exact edge, because I didn't learn it from anybody. I understood the concept of how price delivers daily. I read a book where McDouglas said that in theory, when price closes bullish or bearish, buyers or sellers want to bid price above or below. That was all he said. And I came to the chart, I saw it play out over and over again. That's the ideology. So I'm hyping myself, and I'm saying don't take this for granted, because you won't find this anywhere in the internet. Anywhere. Yes. You won't find it anywhere. So we are done with bullish to bearish for where there's no manipulation and where there's manipulation. Can we proceed? Can I pro? Can I pro? Can I pro? You guys should not form a hand though. Please back test. Please, I beg you, back test. Don't take my word for it. Back test, then come and give testimony. And like I said to my guys this morning, this works on any market, whether it is forex or stocks or indices or synthetics or any market. The question if you ask me that really work for every market, I will ask you that, does that market have candlestick? Does that market have open price, high price, low price, and closing price? If the answer is yes, it can work. So this is not a one market, it's all markets. All markets. I have a gift for that's praise, Abby. Is that praise and Ben for your active participation. I love people that are active. I have I have a gift for you guys. 'Old. 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 ' I'll say I can, yeah. So maybe I'll give you guys. So for okay, if you're not yet, I think Ben is not yet in the mentorship. So what can I do? Let's see. Okay, I'll think about it. But I have gift for you guys. I have something for you guys that would make sense. Yeah, that's by the way. Yeah. So I move on to the next. The next variant is what? Bearish to bearish. Bearish to bearish. Let me take this up for bearish to bearish. Let me take this up. Bearish to bearish. Shalada balakoda vanda sikapados. So let's do for bearish to bearish. So bearish to bearish will mean that what? Bearish to bearish, where there's manipulation and where there is no manipulation. Let's go. Where there's manipulation and where there is no manipulation. Where there is manipulation and where there is no manipulation. That's all the market is doing. No? Manipulate or do not manipulate. Simple. Don't complicate matter. Eh? It's already complex already. Don't complicate matter. Now this means market closed bearish the previous day. That means we open at 10 naira and we close at 5 naira, or $10 and five. Let me use dollar. Let me know it's naira again. Dollars. We open at $10 and we close at $5. We have dropped in price, right? Now where there's manipulation will mean that we are expecting bearish for the next day, right? So if market will be bearish, we want to have manipulation will mean that we first trade above the previous day's close. Because if price is going above the close, we are supposed to be buying. That's the standard. So look at it. Look at it carefully. The close price, this is close. Okay? Close price. If price is going above close price, we are meant to be what? Bullish. Standard. Close price. If price is going below close price, they are meant to be bearish. Write this down. This is the general standpoint of close prices. When price closes and price is going above the close, is a bullish sentiment. When price closes and we are going below the close, is a bearish sentiment. But there's not a case whereby when price closes, we go above the close, we now come below the close. That's the manipulation I'm talking about now. Okay, so when price closes and we go bullish, we now go bearish. That bullish we went before was what? Manipulation. Similarly, when price closes, we go bearish, we now go bullish. That bearish was what? Manipulation. So that's the idea. Let's go back to our. So where there is manipulation for this, my guy, price will do what? We trade above. At this point, when price is going above, we will think that we want to be bullish because price is already going above the close. But mind you, the question is that above, if it's happening during Asian range, that's why I said mostly Asian range, don't yet take it serious that we are going up yet. If price is going above that previous day close in the Asian range, don't yet take it serious because it might be a manipulation. Price will trade above um the previous day low and close, mostly Asian, mostly Asian. Let's see how I wrote it here. I just copy and paste. Okay, good. Price will trade above, right? Mostly Asian. That's manipulation. Manipulation. Okay. Then distribute below. Sorry. Below previous day low and close. And I will show you chart example, like I've said. So we are not going to just talk theory, but we need to first establish the ideology, then now come to the charts. Very important. Very important. Let me move this where it not affect my. Okay, good. I want you to be seeing the charts while you're seeing this. So price will trade above first. Okay, try the first trade above previous low and close, mostly Asia and manipulation. Then should go below the previous low and close. Now, for where there is no manipulation, who can tell me the answer? For where there is no manipulation, for where there is no manipulation, Lambo. Ah, that's giving Lambo. No worry, that one a small thing now. Let's start making the seven figures. Lambo will come. Sure now, Lambo will come. Who can give me the answer for no manipulation of a bearish to bearish? When there is no manipulation for a bearish to bearish, what will price do? I want you to give me, like I stated here, precisely. This is how to narrate your price action. When you're talking financial markets, you talk the terms. I understand the case of you just saying to go up to come down, but let's talk in terms of market jargon. What will price do if there is no manipulation on a bearish to bearish variant? I'm waiting. Price will trade below the previous day low and close. It will trade below the PDC. Yeah, Ben got the complete. It will trade below the PDLC, and continue to distribute below the P. Confirmator. We are getting it now. We are getting it. This is what we want to see on the charts. If you not see it, it's not there. Be fights. No be fights. If you not see it, it is not there. So let's go. Price will trade below, very importantly, below where? Below the previous day low and close. Then continue to distribute. You no go look back. You go just dey go. Piam. You no go look back. You just wait for pullback. As it's distributing, wait for pullback. You sell, wait for pullback. When you distribute, don't go and sell. Oh. When you distribute like that, it has given you the initiation that price wants to now go. You now wait for a pullback. Pullback into where? Fair value gap, Fibonacci retracement levels, order block. You can see we are still applying SMC. We are coming there. We are applying SMC and price action to this edge. It's not a standalone. uh Continue to distribute below what? Previous day low and close. We are specific and we are precise of what we want to see. We are specific and we are precise of what we want to see. Yeah, that's the spirit. Now, I will allow us to do the last one. Now, give me bullish to bullish where there's no manipulation and where there's manipulation. Everybody, give me bullish to bullish where there is no manipulation and where there's manipulation. Everybody, give me bullish to bullish, no manipulation and manipulation. Let's get this once and for all. You come to the charts and back test. Everybody, bullish to bullish, no manipulation and manipulation. Shabarada kupala dedes. Mana topo barada des. Woo. Are we doing that already? Thank you. I appreciate. We are trying our best. We are still cooking. We are just we are trying to do what we can do best. So please let's go bullish to bullish where there is let me screenshot this. Where there is no manipulation and where there's manipulation. Ha! See how my guys are interpreting markets. Hey! Oh boy, eh. My guys they interpret markets. I love what I'm saying. God punish poverty and his father-in-law. Allah to Peles. Oh yeah, let's go. Give me. I've seen for praise. Nice one. Everybody. I want to see what you understand from this. Don't copy what somebody is posting. No, put what you understand that will happen for a bullish to bullish where there is manipulation. Everybody must be carried along. Who again is giving me where there's manipulation? I've only seen for one person. Oh. Or I do for where there's no manipulation. Okay, where there's manipulation, Benjamin says price price will what will trade below PDHC and continue to distribute to the upside. Where there is no manipulation, price trade above PDHC and continue to distribute to the upside. Very simple. Where there's no manipulation, price will trade above previous day high and close, mostly Asian, and distribute above the previous day exactly. Yeah. So for the manipulation, you guys did not add mostly Asian, no, but it's fine. For the manipulation, you add mostly Asian for the manipulation, right? Oh Jesus. Okay, that's good. Okay, I'm only seeing two persons, right? Sorry, no vex. Typing with my phone on YouTube is hard. No vex, no vex. Who else is giving me answer? Two persons here. Okay, I'm okay with what I have. It's fine. Let's proceed. Let's proceed. So next, okay, let me write out my own. La 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 la. Yeah, it's going up. Okay, let me expand this. Bullish to bullish. Okay, where there is manipulation, price will trade below the previous day high and close, mostly Asian, then distribute where above. Just change the tense. Just change the tenses. Eh? Where there's no manipulation, price will trade above. Okay, price will trade above the previous day high and close, then continue to distribute what above. So let's now go to the charts quickly. Let's go to the charts. Let's go to the charts. Let's go to the charts. Previous day high, sorry, previous day high and close. Right. So give me instrument that we should test it on. So it's not be as if I'm the one that is choosing. Give me instrument, give me instruments, give me instrument to test. We should test this on. Today is just introduction. All right. We continue this part two. So today is Friday. Tomorrow is Saturday. Gold. All right. Okay. All right. All right. All right. All right. All right. All right. This guy is gold EU. Gold and EU. Okay. Let's start with gold. Then we do EU. Okay. Let's go to daily time frame. All right. Let's pick. Let's just pick randomly that we can be able to go back in time to see. So let's start with this guy. February 28th and Monday. That means Friday closed bearish. Friday closed bearish. This Friday. Now we don't know what happened. Monday has not opened yet. So we assume that Monday has not opened, right? But we know Friday has closed bearish. What do? We mark the what? The low and the close. So we just go and what? Say, okay, this is close. And we do what? Boom. Yes. Okay. Previous day was close. Then this is the what's open. Sorry, the low. Okay. Previous day low. Right? That's all we need to see. Now, even looking at it from ESF, was there any manipulation? Now, this is let's first take it front. What variant is this eventually? What variant is this? Bearish or what? This bearish to bullish, right? Now, was this a no manipulation or manipulation? Before we come to the 15 minutes, what can you observe from this daily time frame? Because you can even backtest by just simply looking at daily time frame without even going into our 15 minutes. We can already explain the price action delivery here. Let me see if we have smart guys here. Manipulation, okay? Really? Was there manipulation for bearish to bullish? Let's go back to our notes. If we want price to be what? Where is bearish to bullish? Bearish to bullish. We said for manipulation, price will trade below the previous day low and close, mostly Asian, then distribute above. Now, if you say manipulation, the price trade below this close. Look at now, this is where it close. The price trade below this close, They now distribute. Yeah, exactly. No manipulation. Who else is seeing that there's no manipulation? I want everybody to be carried along, please. You say make you do gold though, so we are doing gold. Who else could see that when price closed, price did not trade below this close? Not even talk about the low. Price opened and just started what? Boom. But we'll come down to 15 minutes to see how to now get involved inside this. Who else is seeing what I'm seeing? 28th February, gold. Are we all together? Shabalala Kobra Hagabes. I'm just getting the concept of manipulation. Okay. All right, good. That's good. That's good. That's good. That's good. It's just simply that price is going like if I want to buy, but I first sell before I now buy. That's manipulation. That means that sell I did was just to induce, to manipulate, to think my intention is to buy, right? But I'll first sell to now think that I'm selling, I'll now buy. That's manipulation. Okay. So can we proceed? Can proceed, right? Okay. So let's drop down to 15 minutes. Let's drop down to 15 minutes. 15 minutes. And let's investigate. With this hedge, you don't have to trade every day. Just two trades in a week, you are good to go. You don't, in fact, you won't even trade every day because every day you won't see you won't see market every day. All right, you won't see market. Now look at this beautiful price action. Look at this, very beautiful, very beautiful. Look at when the next day opened. The next day opened even with a gap. All right, already trading above. There was no even coming inside the previous close. And when London opened too, we went above again. So we can see that in this case, what is the scenario? Price traded above PDHC and continue to distribute above. Is it not practical now? What we are saying as theory, are we not seeing it live now? Everybody, you, I didn't choose this chart. So we not say that ProFx is doing this thing. I didn't select this chart. You guys say to do gold, and I'm on gold, and we can see what's happening. Now, when Asia opened, we are already trading above previous days low and close. Okay, we now want to wait for confirmation, right? What's confirmation? Price to what give us a break of structure and retracement. In this case, now, this was the break and retest. In this case, this was the break and retest, and we see that price respected first this rally demand zone. We call it rally based rally. You go to 5 minutes, you see much more confirmations. If you don't want to use pending order, you can use candlestick. Okay, pay attention to details. If you don't want to use pending orders, you can use candlesticks. Candlestick pattern confirmation. Where is this guy? This is so and like even me myself, I am blessed because I also just discovered this to add to my confidence. I am also blessed. I'm also going to apply it to my strategy. So I'm not just teaching you for theory. Can you see the beautiful price action? We are now applying. What are we doing now? Reality and price action now. Is that clear? We are applying SMC and what? Price action. Very clean. This is a break and what? Retest. Demand zone. Okay. This New York section already. New York section, we have a buy. So if you are using a candlestick confirmation, where is your candlestick buy? This particular candle, 230. 230 is your confirmation to close buy. And if you don't want to do instant market, you can wait for price to now come back to this other block on 5 minutes for your pending order again. You will always see clarity. Market will show you what it wants to do. There is no see. It's because we are not paying attention to details. This almighty gold, though, and we are shouting gold, 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 gold. This is gold. We are just waiting for right setups. So let's come again. We saw that price was already trading above previous days high and close. That's one sign of bullish sentiment. Then price now broke structure during London session. What else do you want to do again? Price broke out of Asian high, okay, and it breaks out, it retests. Retested into your demand zone. This is demand zone. This is your high, your low, and what? Your high. Let's do Fibonacci. Let's do Fibonacci. Low and what? High. Fibonacci, we are the what? OTE 1.0. That's 61.8 to what? 79%. OTE 1.0. And buying from OTE pending order, wait for candlestick to close conveniently above, which is this guy, 230. If this is too much for you, then wait for the what? Order block that created the aggressive what buy, and you buy here, your stop loss below, target your extension for take profits. Look at it. We are bullish for the day. Is this clear? Let me put out the long position. Like I said, this is just introduction. I'm just trying to introduce you to what we'll be doing in this. It's going to be a series, right? It's going to be a series. And like I said in the class this morning, if you're having a 50 pip stop loss on gold, target 1 to 3, please. Don't do 1 to 5. If you have a 30 pip stop loss, you can do 1 to 5. Can you see? This is how many pips? 36 pip stop loss, and we can conveniently cover 1 to 5. That's 197 pips. So you have to be smart about your risk to reward ratio. If gold is giving you a 30 pip stop loss, you can do 1 to 5. If gold is giving you a 50 pip stop loss, do 1 to 3. If gold is giving you 20 pips, 10 pip stop loss, please do 1 to 10. 1 to 10. Just put your long position at 1 to 10, put your price there and go and sleep. I'm telling you from experience. Go and sleep. So this is a bearish to bullish what? Chart example. So you can see that I'm not forming this. We all did this together, right? Let me go to 15 minutes. This is a chart with no manipulation. You have to be specific. Bearish to bullish with no manipulation. So this is what we now put in our journal as a winning pattern. Okay, we will screenshot this and have this as a winning pattern in our journal. That on the 28th of February, okay, let me show you how you journal your trades for back testing. Okay, see how you back test. Let me show you. Let me teach you. We're going to stop here today. Has this blessed you? If you have gained value today, please type in value, value, value. Let's do our notes. If you have gained value from today's class, type in value, value, value. right? This is a what? Bearish to bullish with no manipulation. This is bearish to bullish with what? No manipulation. Bearish to bullish with no manipulation. So you now write what price action did. So when next you have something like this, you can be able to relate. Bearish to bullish with no manipulation. Bearish to bullish with no manipulation. So what did price do? We saw price traded above PDHC and continue to distribute. Continue to distribute above. So just look for a good narration that will make you to remember. You can use something else, but let it be in the context of these terms, so you don't miss out on the. All right. Then if you now want to do the full narration, you can now say, okay, out of London section, to just give you cannot give the details at the second narration. Okay, how that price broke out, we tested to OTE 1.0, and put back to other block. Just give a narration that will make you what understand and memorize this kind of pattern. So next time you can relate ourselves. We will do Euro USD now. I'm just doing one for gold. I'll do one for EU. Then we call it today. Or we continue. Can I pro? So bearish to bullish with no manipulation. Let me put it there. Sorry, it is not PDHC, PDLC, 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 PDLC. Okay, okay. Very clean charts. So early Monday morning, you have done done 1 to 5. Sorry, Monday rather Monday. I've done 1 to 5. And like I said, this 1 to 5 you can be done for the week or done for the month. You don't have to trade every day. You don't, so what I have here is a chart example. Real chart, real chart example on what XAU USD. So I'll put the dates. So I would say bearish to bullish. Then I would say Friday, what date was that? I thought it was 28th. Friday 28th, yeah. Friday 28th March and February, sorry. 2025. So Friday was bearish. Okay. While Monday, which is the 3rd March, was what? Oh, was bullish. So this is real chart example, right? Real chart example. No be cho cho cho. This is what we call show workings. Abi now, this is show workings now. I don't show workings. Bearish to bullish. Don't joke with this edge. I beg you, please. Go and backtest it. All right. Can I continue? Okay. Gold. Should we do one more on gold or we should go to let's do one more on gold. Let's do one more on gold. Let's do one more on gold. We have done bearish to bullish. Let's look for another scenario. Um let's look for another scenario. Okay, let's do the next day now. Let's now do the next day to show you that you can continue to consistently make money from this. So let's do the next day. Monday has closed bullish, Abi. Abi. Monday closed bullish, Abi. Let's now do the needful. What do we do? We're going to mark the high and the close of Monday. So this is the high. This is the high. PDL. And I have PDC. Okay. Now looking at this, what will you say is this case? Was this a manipulation case or not? Look at this guy carefully. Was there a manipulation here or not? Was there a manipulation here or not? You can see carefully now. Market is now clear. Was there a manipulation there or not? Looking at the from the daily perspective, there was. Who else is seeing the manipulation there with me? I want more than one answer. Yes, good. Now let's now go to what 15 minutes and see at what session did that manipulation happen. Because we are trying to backtest, right? To find winning patterns. We are trying to backtest to find winning patterns, and they must be consistent. So the question is, at what session did that happen? That's the way I backtest. At what session did that manipulation happen? Market will teach you. Market will what? Will teach you. Now, who can give me chorus answer? At what session did this happen? And it now broke out. Very clean. At what session did this happen before it broke out? Look at it, 8:15. We had a breakout 8:15. Let me adjust it. Okay, it's already good. So I'll just put in my, this is Tuesday. So we are inside Tuesday now. Tuesday opened here. So when Tuesday opened, we saw this coming below the previous day. At what session was the manipulation? Oh, my guys? Asian. Very clean and clear. Like I said, we don't do anything at Asian for us to be safe. Wait for Asian to give you, because Asian range on its own generates liquidity for the day. So we are having two powerful edge in our favor. Asian range alone declares the daily range. Those that know my OG guys knows this. Asian range declares the daily range standard. We're now having a twin brother that gives us a daily bias, which is previous day's close. So this is what we have, a breakout. Like I said, sometimes price might be too fast and you will miss out. No problem. No problem. So 5 minutes, let's see how 5 minutes plays out. Are we saying something? Yeah. So 5 minutes is a more, for me, I prefer using 5 minutes candles for confirmation because 15 minutes might be too late. Okay, 15 minutes might be too late. So I prefer using 5 minutes. So look at it. So here, I won't lie, yeah, you might not really catch unless, see what I did for you card this morning, you can apply it too. So the only time you can be involved in this buy, look at when this guy, that's why I say that price action is important. When this candlestick 820, 825 close above here, boom, this will be your buy. When that's why I say that instant market is also important. Price action is also important. You can use candlestick as confirmation, or you use what, pending order. Because if you are waiting for this break retest, price never came back. You can see price went up, later came down during New York section, then now continue what's going up. But you will miss this first London trade if you are not using candlestick as your confirmation entry. Me, I'm flexible. I don't just I have we have three entry confirmation. One is what, candlestick, two is what, change of character, and three is what, session. So in this now, I have two confirmation entry. One was what, candlestick, and two, London session. So not buy when this guy closed, because we have seen what we wanted to see. After manipulation, we saw price broke out and closed above. What else am I waiting for? I buy. Where's my stop loss? Below my Asian low or below the candlestick that closed. All right. So this how to gather data for your winning patterns. So I have my buy at what, the close of the candlestick, and my stop loss is at what, at Asian low. That's 53 pips. One to what do we target? 1 to 3. Even if you don't have a previous interest point, the market will give you 1 to 3. It's from experience. More than that sef. But let's not be greedy. 1 to 3 and we are good for London section. Because we know we are bullish for the day. We are bullish for the day. We are only looking for buy opportunities. So this, any pullback you are seeing is not to sell. If you are seeing a pullback, you should be happy because that pullback is to continue the buy for the day. But unfortunately, that day closed without having a continuation for that day. All right, but you have done what you are supposed to do. You made money in London and you're good. Is that clear? Confirmation. Session. Session. Candlestick. Candlestick. Change of character and session. Session is for day traders. That means you want to ensure that you are buying or selling during the session, London or New York. So this is an example of what bullish to bullish with manipulate, bullish to bullish with manipulation. I can go on and on and on, but no, I will stop there. I'll allow us to do the back testing by ourselves. So we're going to continue from there in our next class. That will be Monday. Let's do Monday because tomorrow I won't be around tomorrow. I have an appointment in the morning. So we are going to be having it. Our next series will be on what? On Monday. Same time, 12 p.m. Same time. Okay. Um okay, so we have this. So Monday, money made. Tuesday, money made. You can close your shop for the week. Oh, 5% on Monday, 3% on Tuesday, 8%. Close shop. Close shop. You must not trade every day. So this is bullish to bullish with manipulation. Price traded. Let's go. Let's go. Let's go. Yeah, someone should interpret this for me. Someone should interpret this for me. Bullish to bullish with manipulation. Oh yeah, let's go. Let's go. Bullish to bullish with manipulation. Interpret for me. Bullish to bullish with manipulation. Bullish to bullish with manipulation. Who is interpreting for me? Other block. You can apply other block now. If you see other block, about other block. Mentorship. If you're in the mentorship, you have that in the mentorship. Who's interpreting for me? I show the other block now. Other block, we use other block for previous day. This particular other one for the previous day, we use other block now. 5 minutes. Look at it now. The previous day was an under block location. Look at it here. Okay, this is what the last bearish candle. So the last bearish candle before what? The bullish candle. That's the what? 5 minutes other block. Last bearish candle before this bullish candle other block. So price is what we trade back into that other block. So that is a location. Other block is the location, right? Location. Do you understand? Do you understand other block now? Do you understand other block now? When there's manipulation, price will trade below mostly Asian manipulation. Yeah, yep, 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 yep. Price trade above PHDC, mostly below where the, yeah, good. Bullish to bullish with manipulation. Yeah. Okay. So price does what? Price traded below previous goals. Then distributed above previous day high and close. Okay, good. Oh, sorry, traded below. So these are real chart examples. I can go on and on, but let's just call it a word from here. Okay, I think we currently have the news by 1:30 on USD cards. Okay, news on USD card. Let me see what this guy is doing. Are we together? Are we together? Are we together? Um, Trying to get something here. See this guy. Hey, this guy's taking has taken the stop loss and now went. This is a mad manipulation above OT and it's still dropping. It's crazy. Let's revisit this. So see what this guy did here. Still respecting previous days. This is previous days low and close. So you can see it went up. We are still in the Asian range. So he manipulated the Asian eye and is what is dropping. Can you see what he did? Eye and what is now dropping. So above previous day close, below previous day's close, then above but did not close. It wicked out. It wicked out and what is now dropping inside again. Dropping inside again. Ten questions. How do we differentiate between support and resistance from supply and demand? Okay. Support and resistance, supply and demand. Number one, support and resistance is a retail concept. Okay, while demand and supply is an institutional concept. Okay, that's one. Now, when it comes to marking out your demand supply on the charts, there is what you need to look out for demand zone and supply zone, support resistance. Support resistance is simply a level where price has been constantly respecting. That means price went up, it came down, the floor that took price up could not break. So price keeps on respecting and respecting a particular level, the floor. That's support. Resistance, that means price did not break through. Price refused to break. Price refused to break a particular ceiling. It keeps on resisting. That's how you that's how you apply that's resistance. Okay, is that clear? First is support and resistance clear? To break below. Opposite resistance is the ceiling. Why supply and demand is different from. So supply and demand, for a demand zone is an area where there was accumulation of orders, then there was a what breakout. That's the simple way I can explain that. Let me come to the charts. I'm trying to monitor my trades while I do this. So for demand and supply, let's do demand first. For demand and supply, shababa. For demand and supply, what is demand? Demand is where we have, pay attention, we have accumulation of orders in a particular area, then we have a massive impulse. So this area that was accumulated, we call it the demand zone. Okay, so we expect price to what? To pull back and what's bad. So this is a demand zone where you have accumulation of orders before a what? A big push. So we can have different candles, red candle, green candle. So we have accumulation of orders, then we have a big push. Supply is the opposite. Supply is where we have accumulation of orders up and down, up and down. Then we have a big push to the downside. We expect price to pull back to that accumulation and what sell. So that particular zone where you have accumulated orders is what? Supply. That's one way to explain supply and demand zone. Is that first way clear? I should be selling now. Is this clear? Let me move on to this next definition. Okay, good. So second definition of supply and we call continuation. We have a swing and a what? Continuation type. Swing and continuation. Of course, I will show you on the chart now. I just showed you. I just showed you the first one. Okay, okay, the chart. Okay, 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 okay. I'm coming. I'm coming. I'm not. I'm not. My trades are running. I will show you on the chart. Hold on. Okay, so on the charts, let's go. I don't want this to be long. Okay, I don't want this to be long. So let's go to 15 minutes. Euro USD. Let's use. Okay. Example of. Let's see 1 hour. And also note that demand and supply also has to do with trend. So you find your demand zones in a bullish trend, like valid demand zones in a bullish trend, okay? Why supply zone in a what? Bearish trend. This is a whole class. I don't want to go into much details, okay? This is a whole class on its own. We have it in the mentorship, and we also have it in when we come to SMC and location. But let me just do this. Let me just do this here. So just look for a particular, for example, look at this trend. Um, this trend. Look at this trend. Okay. So look at what happened now. There was a break of structure here, right? We had a break of structure here on the upside. Break of structure. Price pulls back. Pulls back to where? You can see at when price is breaking out, we have demand zones. We have swing demand and continuation demand. That's one type to define demand zones. So after this breakout, okay, at this impulsive leg, we have swing demand at the swing and we have continuation as price goes up. So from this leg, impulsive leg, this is the origin. Sorry, this is the impulsive leg, right? This is the swing, low and high. So I have my swing demand, drop base rally, swing demand, and my continuation. So in this case now, this I can say this is my drop. It depends on the time frame you are on. All right. This can be my drop, right? All this might be base. Let me go to 4 hours. Let me go to 4 hours. If the candle is too plenty, go to a lower time frame, higher time frame. Sorry. If the candle is too plenty, go to what, higher time frame. Yeah, this is better. Now watch carefully. This is the break of structure, right? This is the break of structure. So look at this swing. I have a drop, base, rally. That's a demand zone. Candlestick, drop, base, rally. That's a swing demand. So some school of thought says that you should mark out what, the base alone, okay, the base alone as the demand zone. While some school of thought says you should mark out the last red candle before the base. You have two different school of thought. So the first school of thought that says mark out the red candles before the green candles. That's zone two. Mark out red candles before the green candles. Other block demand zone. If you go to 1 hour, you see that there are series of candles that form that 1 hour candle. Look at it. Can you see now? So I can call this accumulation, then what? Breakout, distribution. I don't know if I get what I'm trying to say. I can call this as what? Accumulation, then what? Distributed. Price came back here and what? And we bought. So this is my what? Demand zone. From 4 hours, it is very clear. So the advice is you start drawing your demand and supply from higher time frame. You now refine into your lower time frame. That's the advice we give. Do you get? You draw your demand and supply, your locations from a higher time frame, like this case, 4 hours, okay? Then drop down to what? 1 hour to refine your what? Your demand. Is that clear? We can't talk about this now. This is not the class for demand and supply. So when we get to demand and supply, we are going to talk about. All right, so I have to end it here. So let's enjoy, let's enjoy, let's enjoy. So I'm gonna see us now. This guy is still bearish, right? Still bearish. We are still selling. We are still selling. We are still selling. Okay. All right. Are we good to go? I want to end the call now. So we're going to continue on Monday, 12 p.m. Part two. So I want to get the feedback. So what stood out for you in today's class? Quickly, in the next 1 2 minutes, what stood out for you in today's class? What stood out for you in today's class? What was your take home? Yeah, thank you, thank you, thank you. What stood out for you in today's class? Very quickly, very quickly. And what do you intend to do after today? Because we are not coming here to do theory, it's practical. We are leaving this class with going to do. So, what stood out for you, and what will you go and implement after this class? So, subsequent class, we won't spend more than 30 minutes. I want it to be short, short, short. So, I have to make it very, very brief. Subsequent class is going to be short. 30 minutes, we are done, right? 30 minutes, we are done. I've not sent the other one. Okay. Okay, so the whole concept of bullish, bearish, blah 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 blah, and how manipulation works. Good, good. So what are you going to do? What are you going to do? What are you going to implement after this class? What are you going to do? What are you going to do? What are you going to do after this class? Okay, my take home is basically knowing how to scale down my analysis from higher time frame to lower time frame using previous day high and close in addition to other confluence. Great, great, great. I want feedbacks. Great, great, great. So whilst we are giving our feedbacks and our lessons, I want to encourage us to invite people into this thing we are doing. Right, word of mouth. If you know anyone that you know, so I will tell you who my audience are, my niche. Those that you know that have lost money in forex, that have almost given up. Okay, let them come and learn how this thing works. Those that you know that wants to learn how to trade, that have the commitment to learn, bring them to us. Those that have lost hope, forex is hard, forex is difficult, forex is risky, bring them. Let's lay hands on them. They need to hand needs to be laid on them, as I always say. Let's lay hands on them. So backtesting, yes, please back that miracles are happening here in a wiser peace. Miracles are happening here in a wiser peace. Clarity, what I can assure you, right, or those that are coming, is clarity and mastery. Right, I can beat my chest that you understand how the market works. Okay, because the money we want to make is in the mastery. I always say that what we want is money, but what we need is mastery. So actually what we actually need is mastery and clarity to make the money, and I can guarantee you that you will get it when you come to us. So talk to your friends, talk to people that you I want to, because I have just few times to spend for classes and mentorship. I want to get busy with other things, with businesses and all of that. So the few times I have now to share my knowledge, I want to share it. I'm not hiding anything. I'm sharing all. I'm hiding nothing. And this is free. Come on, this is free. I'm not charging a dime for this. But for the mentorship, it's just a token. It's affordable, right? It's affordable. So I want at least 10 people from each of you guys. Look at your contacts, okay? Look at your contacts and serious people. I don't want people that I don't want to learn. Serious people. 10 from each of you guys. Okay? Do we only have two feedbacks? Wow. Let me see how many people have really Okay, I think we really have two watching. Nice. Okay, good. That's good. That's good. So I think we are good for today. Yeah. Okay, good. That's good. That's good. So I think we are good for today. Exactly. Those that have no experience of the market. That's my target. So complete newbies. Complete newbies. One. Those that have given up and have lost hope and have lost money. So those are my target audience. I would prefer teaching a complete zero newbie than teaching someone that has an idea before, because you have to unlearn some things and it takes a while to first drop some backlogs. But someone coming fresh, I have some guys now with us. Okay, Melky is one of my top trader now in the community. Melky was a complete newbie. He joined us February last year, and after 7 months, he made his first $10,000 on a single trade, Euro USD. $10,000, one trade, Euro USD, three positions. So I have seen it happen over and over again. Newbies with zero knowledge, after 7 months, is now the one now teaching others in the community. He trades gold, he trades EU well. So I have the results of those that have done crazy things. Right. So if you are a complete newbie self, come. All right. Go to go. Okay, good. That's all for today. Thank you so much. Aaron. Thank you. So see you guys in the group.